The increase in sanction against countries such as Iran has brought new challenges in 2010, which we saw. Underwriters and brokers are constantly working to ensure they remain compliant within the various different sanction regimes. Then another European Union's latest sanction, which came last year, directives is due to be ratified, and while its impact on insurers is not yet clear. Anyone even considering ways in which sanctions could be avoided may be prosecuted under the anti-avoidance clause. As profit margins continue to be squeezed, we foresee increased divergence between those underwriters who are looking to build or expand their accounts and those who may become increasingly defensive or selective. This means a marketplace where it will be essential to employ a sound professional broker. Now let's talk about both the stream of upstream and downstream. Almost 5 months to the day after the tragic blowout of Macondo, BP announced that the well had been permanently sealed and abandonment operations had commenced. The immediate disaster may be over for BP, but the aftermath for the oil and gas industry in general has only just begun. While BP themselves did not buy insurance, the loss the market is ultimately likely to suffer from control of well, including cleanup cost and liability policies purchased by BP's joint venture partner and contractor, has been estimated by some commentator excess of $3 billion, which still has to be consolidated. Softening pressures are beginning to mount despite recent losses. Capacity is at a 10-year high, if you see. Major losses are particularly felt by the fledgling Singapore market as well. And although 2009 was not a bumper year in terms of profitability, it was hardly a disaster one either. The new Gulf of Mexico rating model remains untested following a benign windstorm season. There has been an upswing in activity in the offshore construction sector. Now let's talk about the capacity in both the stream. If you see here in these are the figures of 2011, last year, which we concluded. So 2011 upstream capacity highest since records began, but pricing increases from standalone and marine liability risks will still continue to increase. If you see these figures, which are the operating and the construction and estimated realistic market capacities versus. Considering the time, I'll just run this statistic, and if you have any questions, I will answer you after my presentation. With regards to this profitability, I can see that 2002, there's said to be this is which has been sourced with Willis Energy, which was provided. So this is which we got it from Willis. So these are the figures which we see that 2002 also was not good, and of course 2011 was as well not good in that particular profitability-wise in that particular segment. But upstream energy portfolio in general still looks profitable as per Lloyd's. And following hurricane in 2008, Lloyd's upstream portfolio still looks profitable if you see these statistics. And again, upstream market dynamics in 2011, if you see the energy insurer capacities and average rating level. Here, before the recent losses, the period of false equilibrium was coming to an end. And the beginning of 2011, because that particular point of time, before a recession, we always used to have a 5-year plan, and as all the industries. And in that, it was more like an equilibrium versus the new build and the present. So because of the slippage, because of the cancellations, whatever you see has affected here. Then again, before the recent losses, the period of false equilibrium, as this is, I believe, a repeat. Okay. The underwriting environment with downstream now. Downstream insurers are beginning to compete for business in a manner not seen since last truly soft market since 2000. While North American market capacity remains stable, its international counterpart continued to grow. Various markets became more prominent, including Chartis, Civistar, Talbot, Validas, Taurus, and Zurich. Following a benign underwriting year in 2009, the portfolio remained profitable despite the softening market conditions. The level of attritional losses has fallen to the point where rates could fall further before the inherent profitability of the class is threatened. The degree of aggression shown by individual insurers is now driving competition in the market rather than overall capacity. Regional markets are contributing to the softening process. And this is, again, the capacity of the downstream. While North American downstream market capacity remains stable, you can see here, and excluding Gulf of Mexico, of course. Profitably-wise, downstream energy losses, if you see from 90 to 2011, which was excess of US $1 million, versus estimated global energy premium income. And again, from the Lloyds, these are the data collected until 2010, which is available. Now, downstream insurer capacity and average rating level. Downstream market dynamics till 2011. Here, your average from composite percentage of from 92, since 92 rates, went drastically down. Global, now these are a regional overview. Global insurance market, as we all know, is in flux. Asia market is growing confidence, especially we talked about China, we talked about India. Europe, regional strength, international capacity is growing. And Scandinavian is almost down, but is not out still. United States, of course, with all this, what has happened, needless to say, the prices are going up. And London market is stable and traveling well. So the highlights, market move closer to customers. That's what we were talking. Asia gains confidence. Europe flexes muscles. Scandinavian takes stock. US sees price rises. London remains at the center of innovations, as has been always. H&M, Hull and Machinery challenges ahead. A decade of underwriting returns. Downturn hits investment income. Hull values are falling down. Increasing reinsurance cost. Underwriter press for rate rises. Premiums volumes fall. And plentiful capacity. For P&I, there is a sign of stability. Clubs take decisive action. Big claims are driving. Time lag. And there is asset reallocation again. And there are new regulation for P&I, which has come post-crisis as well, and which is also affecting in a way to the vessel owners. In conclusion, plenty of options are open for buyers, but as we say, beware of the long-term implications. The current market conditions are now causing insurers to think again about long-term policies. Recently, the unrest in the Middle East and North Africa region has led to an increased interest in strike, right, and civil commotion coverage. An intelligent insurance broker, as I said, can help identify and quantify risk and bring them under control. They can create and implement customized solutions employing the most effective blend of risk mitigation, risk transfer, and advanced risk financing. These solutions go beyond traditional property casualty insurance program to encompass strategies that can help increase a firm's revenue growth and enhance its net income and its balance sheets. So with this note, that isn't about time you start thinking outside the box. I thank you, ladies and gentlemen, for your patience. And if you have any questions, feel free to ask me. So I believe we say silence before the dawn. So it's the time, if there is no questions, so it's the time for a break and then get some energy. What we do is already we are running short of time. We are late by 15 minutes, so we are trying to catch up. So 11 o'clock we were supposed to meet. Now let's meet at 11:15. Thank you all, and we'll look forward to see you again at 11:15 with new presenters. Thank you. Well, we have the panel ready for the interactive panel discussion. And in this particular panel, the moderator, Dr. Saleh Malaika, who is the Vice Chairman and CEO of Salama Group, was supposed to come and do the moderation, but unfortunately, because of unforeseen reason, he couldn't attend. So he has sent one of his senior colleagues here from Dubai, Mr. Rafiq Halani. Just to give a little bit of Mr. Rafiq Halani. Rafiq Halani is GM of Salama in UAE, and he's looking after General of Health Operations and Health and General both. He's been in the industry for over 23 years, and this is his 10th year with Salama. So we should give a big hand to Mr. Rafiq for 1 decade of his professional career with Salama. He is an MBA in finance. He is MSc in risk management and insurance. He is also a lawyer, LLB by profession, and he has done his bachelor's from UK. To start with, the topic of the discussion, which we all know, are we thinking takaful and acting conventional? This is the topic of the discussion. As we all know, ladies and gentlemen, that takaful is still a very, I should say, is not matured yet, and as related to the conventional insurance. So there has been always a debate, particularly on this issue, whether many of our friends from the industry, they feel that this is just a change of nomenclatures, and these are the similar products, and to a mass who is looking a Sharia compliant product. So it means some of them also comes with that it's more or less we have the feeling of those masses as well, which they feel that has to be a Islamic product. So this particular topic, I'm leaving in the hand of Mr. Rafiq Halani to moderate.
Yeah, thank you very much for such a wonderful introduction. Sitting with such a learned panel, I guess it puts a little bit weight. So thank you very much. Ladies and gentlemen, assalamu alaikum. I would like to request the panel to introduce themselves. Mr. Shakib, please go ahead.
I'm the CEO of Takaful. I have been working with in Takaful industry since 1987. Initially with Best Rate, then I moved to Takaful. In fact, all my career is was in the Takaful industry. Thank you.
My name is Arya Tayyib, and I'm heading the Insurance and Reinsurance Services Department of BSA. This has been Shabib Associate. It's a law firm in DIFC, and I have over 18 years of experience in various areas, including takaful, reinsurance, and regulatory.
Assalamu alaikum, good morning everybody. My name is Abdrazak Al-Wahib. I'm the CEO and the MD of Ta'asir, Takaful Insurance Company in Kuwait. I've been in this field for the last 28 years, based in Kuwait for that. Thank you.
Assalamu alaikum. I'm Ajmal Bhatti, CEO of Document Middle East, and a student of Takaful since the 1980s. I'm still learning, and I think there's lots and lots of things to do in this industry. And with our colleagues here, we are actually working together to do just that. Thank you.
Good morning, I'm Ludwig Stiftel. I'm with Munich Re, current at the Center of Competence for Takaful. My first connection with Islamic finance was in 1989, very briefly, when I did a diploma thesis on that. Then I made a long break and returned because of that background in 2004 to Munich Re's Takaful project. Then went to Kuala Lumpur, came back, and if Ajmal calls himself a student of Takaful, what I am.